And the big story about Netflix was stock dropped 27% after the streaming giant reported a loss of 200,000 subscribers. The latest number I saw, and back, Patrick, if you can help me out on this, the latest number I saw is that they have 214 million subscribers. That's a lot of folk. They got 214 million. You have a different number?
No, I saw it looked like it peaked right around 222 million, I think.
That's a lot of folks. You know, we're sitting back and we're saying, wow, that's a lot of folks. Another side to this is Netflix drops 32% on track for the biggest fall in over a decade. That's huge too. All right, so I think that's why the story is taking precedent in what's going on in the market today. That's the biggest loss in 10 years.
But then they're also predicting another 2 million subscribers lost. I forget the exact time frame, but over the next year or so, I think it is.
What are they attributing that to?
Who knows?
Right.
whatever they want to claim there at that point.
All right, so and I'm going to ask you, one thing I'm going to say is that there should have been no surprise to this. Would you agree with that?
Yeah.
All right, I'm bringing up the VectorVest software. Couple of things. If you are a VectorVest subscriber, you could have seen this coming. Let you point out some things before I point out some things. And you should have control.
I mean, I think the chart speaks for itself.
We
saw the run from the pandemic, the COVID pandemic. You saw the run up there. And then all of a sudden, everything started slowing down. People started actually getting out of the lockdowns. People started going out more, spending more time outdoors with family, going and visiting people. They don't have time for it. Netflix is increasing their prices left and right. So, of course, that's going to be one of the first things people drop, especially with so much competition out there now.
There you go. You touched on a few really good, poignant points. Some of the things that I'm looking at it from a graphical perspective. VectorVest gave Netflix a sell on January 5th of 2022. At that time when we gave it a sell, the stock was already trending down. Patrick was right. During the COVID, during the lockup, I think that all of the stay-at-home stocks, and I think both of us have done videos on what we call stay-at-home stocks, and, like Peloton, like all of the streaming places. And you know what else? All of the food delivery stuff. Grubhub and DoorDash took off. All right. So now that we're getting out of the house, I think that less and less people, as Patrick said, they ain't got no time for that. But looking at it graphically from a VectorVest perspective, the stock has been overvalued for a long time. Our mantra is always to have you in safe, undervalued stocks that are rising in price in a rising market. But normally when a stock is overvalued, and value is what we feel a stock is worth, it's an intrinsic value. It's based on a few things like earnings and earnings growth rate. Stock stayed overvalued for the majority of the time, and normally price falls to meet overvalued stocks and rises up to meet undervalued stocks. So stock overvalued. I've got a 20-day exponential moving average. Stock got me out a couple of times earlier than even the sell recommendation. Relative timing on the stock crossed over. That's when we know when a stock's in an uptrend or not. Above the value of 1, based on the scale between 0 and 2. Above the value of 1, the stock's in an uptrend. Below the value of 1, stock's in a downtrend. Look at that. RT went down below 1 on 11/30/2021. We just did a video on our channel called the Near Perfect Indicator, which utilizes relative timing. If you haven't watched it already, go check it out. Some of the power behind the VectorVest software. When looking at stocks like this, where this happens, the earnings not so good, it really wasn't a surprise if you're a VectorVest subscriber. Twice earnings has fallen. Look at this. Back here in the last earnings report on 120, big drop in earnings. The stock's price tried to go back up. Relative timing never got back above 1 and did it again. Not only this drop again, and as Patrick always likes to talk about from a technical perspective, we got a lower low. You know what about this low? I'll put this on a 5-year graph. I thought it was the lowest it had been. Oh, I'm looking at weekly now. Let's go put this back on end of day. Put on a 5-year graph. Look at that. That's the lowest it's been in 5 years. The other previous low was 139.27. Oh, no, we're not there. Right now, we're still trading at 221. So we're not at an all-time 5-year low, but we're getting close to it. So there's a lot that's going on here. Some of the reasons why Patrick talked about it, competition. How many other things do you have besides Netflix, Patrick?
I mean, we got Amazon Prime.
Yep.
That's included with, the Prime membership anyways. Disney Plus is...
Got that.
But I mean, really, we don't even really watch Netflix that often anyways. With the kids, the only thing we really watch on it is the kids version of it so they can watch a few shows every now and then.
Okay.
But I mean, there's so many different other opportunities out there.
Roku.
So many different other options that don't even cost anything for kids that, we don't even really go to Netflix all that much.
HBO Max, as Steve said, is another one that's out there. There's a lot of other streaming services out there. So competition is big. Raising the price. Why? Because inflation is an issue. Another thing, and Patrick is right about this too, content. How many times do we come around here talking in the office asking about, what you looking at? What you looking at? What you looking at?
I mean, the last big name from Netflix that I can think of was Tiger King, and that was during the lockdowns. So,
yep.
What has there been since that point? So that's been, 2 years ago now at this point, since the last one that everybody was talking about?
But everybody is scrambling for content. Everybody's trying, and this is a very competitive field, and everybody's trying to come up with content for people to look at to keep them interested, right?
But the thing is, Netflix is also pretty much priced themselves out. If you look at the competition, you look at Disney Plus, you look at the HBO Max, you look at those are anywhere from $5 to $10 a month. What is Netflix now? Netflix is at least 12 to 15.
I don't even know. I just get billed for it. I don't even know. My
Exactly.
wife yells at me for that. She's like, "What do you pay for?" And I'm like, "I don't even know."
Eventually, they're going to price themselves out. If the best ideas that they can come out with is trying to ban sharing accounts and trying to increase their rates, that's just not a recipe for success. And I think we've seen that with a lot of the FANG stocks, I think that's why you see Facebook, which could possibly have another earnings miss here coming up soon. But that's why they're trying to make that pivot, because the Apple restrictions they put on their phones block some of that ad content or ad revenue now. And I think we're starting to see, the stocks that are going to stick around are making pivots at this point, and the stocks that are kind of comfy and set in their ways are dying off, kind of like we're seeing with Netflix. So
let's put this all up in a big bow. If I'm looking at the stock right now, couple of things, and I'm going to preface it this way. Couple of things. One, the stock is undervalued, and two, the stock looks attractive because of its recent low price. So, would you buy it now? Yes or no?
No.
Absolutely. And I'm going to say the same thing too.
So let me ask you this then, Glenn.
Yeah.
Because it's a FANG stock, FANG Plus, whichever index you want to go with or look at, do you think it's time now, after 2 big earnings misses and a decline, do you think it's time to take them out of the FANG index because they're not, would you consider it a growth stock anymore?
No. Well, yes and no. So do I want to take it out of the FANG stocks? Probably not yet, because the name still garners a lot of people. So I'll say it from that perspective. It does have a high relative value of 1.52. All right. And even when it dropped before, and relative value looks at the stock's ability to outperform the stock market. But if it continues to underperform, it's going to affect that relative value. So I don't know if I take it out just because it's Netflix. That's, does that make sense? Just because it's Netflix. I don't know if we take it out. But at the same time,
though, is it time to, how long has it been in the FANG index? Since what? When was 50,
I don't know when the FANG was
2016?
Made. Okay.
And the FANG was created as a growth basket, and if they're not a growth stock anymore, that's hurting the rest of that basket. And as we've seen with ETFs over the throughout the COVID crash and throughout the last 10 years, because all these stocks are so bundled together nowadays that, one bad apple can hurt everybody else. So
I went back. I'm looking at that time period. Trying to find the early 2016. All right, early 2016. Let's go. That's 12/21.
And also keep in mind the split, because this stock has been $100 to $200 for as long as I can remember.
All right, so it's split back in 2015. Here's the split.
Yeah.
All right, so even after the split and the price is split adjusted, is it still higher than? And is it still higher than its inception? Into the 1/4 of 2016. Let's just start it off the beginning of the year. Price was a 109. The price even today is sitting at 222. It's still higher as a FANG stock, but it's had a rocky ride. So my opinion is, do I take it out of the FANG stocks? Probably not yet. It's got 2 earnings missed that affected the stock adversely, and it's still Netflix. And there it is. Somebody said about Kramer. Kramer said on January 13th, yeah, I'm going to get Kramer involved in this. Kramer said on January 13th of this year to buy it, and the stock got smoked. But even before
Kramer,
when
it was trading at $500 a share.
Yep. And even, since that time, even when Kramer said, yeah, go buy it, we had already had a seller recommended. So, all right. So we did a lot of detailed information on Netflix. I still love the idea that it shouldn't have been a surprise to you if you're a VectorVest subscriber. Pointed out a couple of things. I've got a 20-day exponential moving average. I'm not even putting a bunch of technical stuff on here. Relative timing, when it was above 1, the stock was trending up. When it went below 1, it trended down. The recommendation being a sell, and when we gave it, the power of the VectorVest software is there for you if you are not a subscriber. We always offer 99 cents for a 30-day trial to the VectorVest software. If you go to www.vectorvest.com/YT, no matter who's